So welcome guys once again. Thanks for joining us on Sunday. Definitely we want to get ready for the week ahead, and gonna get started with the goal here. So for those of you who are brand new, who haven't followed the price action that we give additionally as a as a K2 community, besides the K2 strategy, is the price action, which I mainly trade, and along with the K2, it's just been really successful for me. So essentially what I look for when I, let's say I didn't have this charted, right? So what I do, I first go on the weekly time frame, right? So I identify the trend, overall trend. As you can see here, gold is still very bullish. This is the trend line, started all over here from the August 6th last year. And, it made, few touches, retraces to this trend line. But gold broke up really hard due to the, trade war from US and China, some fundamental aspects, economic news have resulted in a weakness in dollar, and therefore people usually tend, when there's instability and insecurity in a certain economy, to go against, and usually people turn into JPY and CHF, which are known as haven currencies, meaning when people don't feel like they're to take any risks, they reduce it by investing in those currencies as well as the gold. So when I draw my support resistance, I go here and I switch from the candles to the line chart. The reason for that is, and I look for the sharp turns like this. So obviously gold break up, and this was the current weekly support. How I know that? If you look left, if you go back into the history, price has left this print right here. And if you switch to the candle, you can see that the wicks rejected this zone, right? And that validates this as a strong current level to hold, since the price has rallied so much and was on a bullish run. So once we are able to identify the new zone, that is where we can trade with, right? As well as this resistance here, as you see here, sharp turns, and validates that is the point where the price will struggle to break. And you can see this on a smaller time frame. We can go to the daily. As you see here, there was a weak breakout again, and then even though we had this breakout and closure, it was followed up with this huge engulfing candle, right? And if you guys trade candlestick patterns, this is known as a evening star, right? When you have a bullish and then a strong engulfing, completely covering the previous two candles, it's one of the most powerful and the strongest patterns in the market. Combine all those three, like I said, it's called evening star. And as you see, after that closure, we have continued to see gold drop, right? Well, going back to the more relevant time, which is right here, is gold has respected this zone right here. It's known as a liquidity zone. So usually what I do, I highlight it like this, because that is where price is rejecting, as you see here, 1, 2, 3 touches, and it has held into this weekly range, right? Range is when you have current market structure in a certain zone. For example, from here to here, this is the current range of the gold, right? As you see, it's been trading there for a long time, for past almost 1 month and a half, right? Ever since it broke to the upside, this was the range that gold has been trading in. We see have rejections here, double top, fall back down. We already covered this. It was a breakout, but it didn't held above this resistance, and therefore we are back into the zone, right? So essentially what gold have done last 2 days, mainly last day, which was on Friday, is that this strong wick rejected this liquidity zone, which is also around our weekly support, and then we have seen another reversal. So if I'm looking at this, I go always on 1 hour, right? So for my eyes, what good entry looks like is, you see here we have one rejection, which is this week. Then we have this indecision candle, and then we see price slowly climb up, then makes double bottom, right? Double bottom or W on this, what is it called? Just underneath the support, and then it continues rallying back up, right? Guys, give me 1 second. I just have a one phone call. Give me 1 second. All right, well, right back. Not gonna answer that now. So essentially we can put it on the line, and this is the double bottom I'm talking about, right? So here we go. This is one bottom, this is second one. So some people refer to this as a W. Either way it's correct, whether it's W or double bottom formation. And it also, combined with this rejection that we have seen off of this area, it's a strong indication that the price will continue going back up, right? Even though this was a strong bearish candle, you can see that this candle is obviously, caused by news. Pretty sure. Let's see, 18 September, 2 p.m. Let's double check. Maybe it was something related to FOMC. Let's go back. By the way, for the economic events and the news, I use forexfactory.com. So it's something to keep an eye on, because you don't want to get caught in during the time where you see this, folders. And there we go. This was exactly the FOMC candle on the September 18th at 2 p.m. And there it is. 1, 2, 3. 3 red folders followed by the press conference, right? How do I record? I'm recording it, Brian. I'm recording it already. So it will be uploaded on our YouTube channel. So you will be able to watch it again at your convenience. So in case any of you has to cut it short, go take care of, business, personal things, family. For that reason, we definitely, try to make this convenient. But it's better when you also can see it live and ask some questions. Even though you might not be able to be till the end, you can always message me in Telegram, Instagram. So no worries, and you are welcome. So we were right here. So obviously FOMC, it's something. Well, some people say, well, news, is just impact that is set up by the price action. That could be. It could be. If you watch the last 3 candles here on 1 hour, there was a rejection off of this. This was a daily resistance at the time, right? Now it's support because obviously price went up. So this was a daily resistance. So it is a strong zone that you can expect the price to respect, right? And yeah, there was, see the two hammers and then indecision candle, and it was followed up. So if you are someone who likes to trade news, because obviously you can catch a huge move, it is, however, high risk, high reward. Well, higher reward, because this whole move was insane. This was 240 pips. So yeah, that's beautiful. I do trade news, just for sake of information. I do trade news, but the way I trade it, I have a separate account. I put like $100 or $200, and then I just play with it. But if you're someone who is new to trading, I do not recommend doing that, especially not over leveraging, because yeah, it's great if it goes your way, but also you can lose money real fast. So we teach you essentially how to learn trading, what to watch for, and compound your account. At some point, if you have extra money, you want to do news, then good luck with it. But yeah, Me personally, I also agree with the statement that I was just mentioning, that technical traders, they don't worry about the news, right? Because you can look at this from the technical perspective, is that price wicked off of the resistance at the time. Don't get confused once again with the support, because right now it's support. Um, and there was the reversal and obviously shot back down. But then what you have people who are more patient, who wait for the opportunities, and those will be the ones with the setup that we mentioned here, wicked off of the support, meaning the price is failing to fall further down, double bottom and continuation. So most people will buy right here. If you are more conservative, you will wait for the breakout here, which is this candle, and then you would enter on the one right here, right? Let's point it out. You will enter on this candle. And if you would have done that, let's say you enter here, you will be in drawdown maybe, what was that? 15, 16 pips, but you will be running 215 pips right now. So that is essentially how you look to spot the right opportunities with the decreased risk, right? So that is one of the main things that was able to benefit me after I have gone through a lot of strategies and testing all kind of stuff. I found this simple way to observe market, be patient, and it paid off. And let's just look at this with the K2 strategy. I'm pretty sure there was a buy signal. Yep, there was one right there. So if you are a premium subscriber, you would have bought here right after the closer. Drawdown was 16 pips, and you would have pocketed about 115, right? And then you would see the rejection. You probably close out, wait for it. We don't take the sell on a bullish trend. As you can see, this is the trend meter, verifies your trend. You don't want to counter trade unless you are an experienced trader. This buy signal turned out to be valid, but the reason you usually wouldn't take it, because there's a bearish candle inside the buy signal, right? So you would wait for this one right here. See, you would enter right there, and you would be in drawdown 31 pips, but you will be running 125. So it's all about reducing the risk and finding a good entry so that you can benefit from it. And so yeah, that is really simple way I look at it. I find the patterns. One of the other things I like to trade is the channel trading, which I look on 1 hour and a 4 hour. So here we go. This will be a nice example right here. So you have let's turn this to the line. Okay. So you have a channel forming here, right there. Make it a little bit prettier. So here we go, right? So another thing, this is a bullish flag, all combined. You had the impulse bullish move, then you have the retrace inside the channel, and then you have the breakout. So you can enter on the breakout, right? You see here breakout, then you wait for the retest, which you got here, this candle. And if you would have entered right there, you would be able to get 80 pips, which is beautiful trade, right? Dilu, yes, that is a custom indicator. Is developed by Sean. He has worked on it for a few years. I'll get in touch with you. I'll explain you a little bit further about it. Pretty much, it generates. Let's switch to it. So the whole strategy is combined with the pivot points, Ichimoku cloud, and certain levels where you have the crossings for the buy and sell signals. Also, Sean has recently developed this trend meter, which if you are not sure what is the current trend on 30 minutes, 1 hour, 2 hour, and 4 hour, you can look at the bottom and it will tell you. So for example, the red is the bearish trend. When it's this light blue color, or not light blue, like aqua, it's indecision, right? So even though this was a bullish run, if you're conservative, you wouldn't have entered because there is no green light for it. To make the setup perfect, that was the only component that was missing. So let's go back to the current status on gold. So as we see here, we do have breakout above this resistance. So this becomes support right now. And the reason it's becoming support because this 1 hour, which is the last 1 hour candle of the in the last week on Friday, it closed above this level, right? So what I would essentially wait for, I would wait to see when market opens. Actually, gold opens at 6 p.m. Not at the 5 like all other currencies. I would wait to see if this level holds, and I would probably continue to buy this, right? So I would definitely target this next level, which would be from this support about 100 pips, right? 90, 98, 99 pips to this level, right? And also into this liquidity zone. And once the price reaches here, we can expect either some nice retrace or, or we can wait to see if it breaks. But I don't think it will break easily because this is daily resistance, right? So let's see if we have any messages. Okay, now we are good to go. So essentially, you want to know the overall trend. You want to know overall structure on the higher time frame, and you want to know your key levels, which is weekly support and resistance. All the green lines that you see here, those are intraday, meaning on 4 hour and on a daily is that I find them, right? Because you see the rejections here, and once it breaks up, holds, then rejects here, then it bounces off of it. So those are levels to follow. As you see here, once the price broke up, consolidated here for a while, then went up, came back down, rejected that same level, and so it's really nothing complicated. You want to simplify your trading. As you see here, respect it and then look at that buy. That was really nice. That was almost 500 pips. So that was example on 1 hour. Let's see if we can find, there's a channel on 4 hour, which is also this downtrend. Let's see. So this is another way I trade. So there we go. It was riding down, came back, rejected, retrace, fall back down, rejected the channel again. It's consolidated here around the resistance at the time, fell back down into the zone. Then we had a breakout, and a lot of successful people, they like to buy on a breakout because that they feel that is the safe way. So you would have bought here, and it went back up essentially 340 pips. So it's really looking for those simple strategies and setups. But yeah, like I said, to conclude about the gold, I do see this running further up. However, you can get some retrace. To measure your retrace, you want to use Fibonacci tool. So from here to here, I mainly look on 1 hour, sometimes on a 4 hour. But yeah, we can probably see something like this, retrace to like 38.2, even 50, because that would be back to the daily support, and then essentially continuation to the upside from here. So the Fibonacci is definitely one tool that I use to verify my entries after pullbacks and retraces. So on a bullish trend, you want to look for 38.2, 50, and 61.8 pullbacks, right? And buy off of them for the continuation of the current trend. And also you will go with the overall trend, which is bullish on the gold, and there's no way you should not be successful with it. So that was the markup on the gold. We can go check GBP USD. All right, let's look at this daily. We change to the line. I'm gonna add a line here. Right there. Okay, yeah, that is daily resistance. So let's just mark this. But let's look at on a weekly just to verify once again. Actually, this is weekly resistance, which is even better. Will do. Give me 1 second. So this would be actually weekly resistance right here, which is even better for us. So we know it's a really strong zone. This is now weekly support. So we have a question to repeat Fibonacci, no problem. Here we go. So what I was telling about the Fibonacci that I use it for, you have this move, right? As of right now, I would not have used it yet because we need to see some rejection, right? Because this can just keep rallying. Let's find example where we would use Fibonacci. Okay, so let's do this one right here. Okay, so we started here and right there. Okay, so this was a bearish turnaround on gold, right? So the move has been pushed down, right? So once we see reversal, as you see right here, you look for the retrace for re-entry. So let's say you came home from work and you saw, oh man, gold fell and I missed it, right? No problem. So you pull your Fibonacci's and then you wait to see where the rejection is going to happen. And it happened right here at 38.2. So once you saw that, that would have been your entry to continue writing this down, right? Right here, because you see the rejection on it. Probably right there, okay? So here we go, even better on 30 minutes. So you see this candle reject and then continue to fall down. So your entry would be on this second candle right there. And essentially you will be able to get 200 plus pips, right? So what I was telling that certain levels you have to watch for is 38.2, 50, and 61.8, because those are the ones that usually you can see pullback to and retrace before the continuation in this run, which is bearish, obviously, as we see right now. Some instances you will see up to 78.6. That is a little bit stronger pullback. Once you see the price retracing past 78.6, you want to get out if you entered right here, for example. If you entered all the way on the top and you see the price pushing past 78.6, you want to close your buy. Why? Because once you see breakout of 78.6, that indicates that there's going to be a reversal back into the bullish run, right? But once you see that it confirmed only till 38.2 and 50, even 61.8, that means, okay, this was just a little bit stronger pullback here. Now it's ready to continue falling back down. Does that make sense? let's see, owner. Is it a little bit clearer now? Let's just wait for him to answer, because he was the one who asked. How would I label the weekly? Let's go back. So I would obviously go on a weekly time frame, and as I let's clear the fibs. Let's clear it up a little bit. So you go on a weekly, Jason, and iPhone, yes, always from the higher time frame, because you want to know overall direction. We identify our trend, so that way you don't counter trend if you're not comfortable doing that. Always on a higher time frame, because that is where you are able to find your key zones weekly and the trend overall. So Jason, the way we find weekly zones and how we label them is you go on a weekly chart time frame, and then you switch from the candle to the line chart, and then you look for those sharp turns that we already mentioned. You see where price rejected here, and then when it broke above, you see how it respected, which indicates strong support. Same here, broke below, retested, made this valid resistance, and it continued to fall. So you want to look for these sharp turns on a higher time frame to be able to label them. And then you just I use a thick blue line, as you guys can see, for my weekly support and resistance, and for the intraday levels, for the intraday support and resistance, I use a bright green line. So that tells me, you know, that it can for intraday trading, which I do. This can help me decide whether I want to hold my trade longer, or I should take profit based on some other things too, fibs and candlestick patterns. So I just literally label it weekly support and resistance, as you can see here. Does that help a little bit? Let's see. Want to make sure it's clear. Okay, awesome. No problem. You're welcome. Yes, always from a larger time frame. Because let's say randomly, let's see what I don't really trade. AUD, CHF. Here we go. This just jump into example. And we had question from 30 minutes. So let's say you jump here in 30-minute chart, right? So this is AUD, CHF. This is just for the sake of example. So yeah, I opened this, right? And let's say we are looking for support and resistance. So this right here would be support. This right here is a strong zone as well, and that right there. So this was questioned by iPhone. I don't know the name, but that's your user on Zoom. So let's say you are trading on 30 minutes only, right? You can catch some small moves, right? Let's see here, rejections. That's 40 pips. But what would you do when it breaks here, right? There's only 12 pip move, right? Me, I don't trade that. I go for a whole move. And in order for me to know what is the overall trend, you cannot find trend on a smaller time frame, right? I'm not sure what you mean, which one is best. the best approach is to start on the weekly, then daily, then 4 hour and 1 hour. So if I know that the price is like, let's say at the strong weekly support, right? I'm gonna look on 1 hour and 30 minutes to see the candlestick reversal and for me to enter the trade. But you don't trade just on off of 30 minutes and 1 hour chart. And if you go here on a daily, look at this. So you can find much better zones. So let's check this out. So that was a strong reversal. And this will probably continue falling back down here. So instead of going for 13 pips, after you see the rejection here off of the daily resistance, you enter there and look at this 112 pips. So would you rather go for 12 or 112 pips? If you have 100,000 account and you trade 10 lots, then 12 pips is $1,200. That's fine. But that 12 pips can also be $12,000, you know, and more. So you want to look for the higher time frame because it predicts bigger moves, if that makes sense. So let's go back. We were here at GU. Yes, weekly first, and line chart. Remember, line chart for the support and resistance, because on the line chart you don't have wicks. You only have full bodies, which tells you where the price actually closed. So we have GU here on the daily. It's looking nice. So there we go. You see, we again another example that we had our zone right, rejected perfectly off of weekly resistance. And if you didn't enter there, you enter on this second candle opening, which was right there. There's 80 pips already in this trade. So let's look at it on 1 hour. And here's where we can apply fibs again, right? Let's zoom in. So this bullish move started here and ended there. So owner, if you follow, this is the perfect example. Where would you use your fibs? We have a bullish run, and then we had a reversal here where this red candlesticks wick from this candle has closed, right, or stopped price from going further up. So now you look for your retrace. Okay, 23.86 didn't hold. 38.2 it held for a little bit, but not really. 50 it consolidated around, but here 61.8, and there's your entry. Let's say you again missed this, maybe you had to go attend your brother's birthday or whatever, you had project for school, whatever the case be, right? You don't have to panic because you know how to use Fibonacci, and you wait for this pullback and see where you see the reversal. So you would enter on this candle right here, and there you go, 124 pips. Yeah, this is example of 61.8 rejection, but it could have been 38.2, it could have been 50, right? So it's not always. For GBP pairs, however, most of the time, case is 50 and 61.8 rejection, most of the time, right? And again, you go back on the 30, if you have K2 strategy, let's look at this. So there we go, buy signal right there. Let's zoom in. Look at it, buy right there. And if you were not sure and you wait and you wait, and then you wait for the trend confirmation, not a problem. So this confirmed right here on this candle, and you bought there. Let's go down, and you bought right here on this candle. You still get 96 pips right? Yes, Dion. Yes, Dion, definitely. We have a question from Tom. So if you enter at 30, would you set stop losses? Great question. Let's go back. Let's zoom in. It's a great question. Not a problem. Not a problem, owner. There's few trainings. I will also send you video that is specifically on a Fibonacci tool. So no worries. I'll make sure you get it. So we had question from the Tom. If you enter at 38.2, so I wouldn't have entered on 38.2. Why? Because you see this strong candle. Send me the video. Yes, definitely. I will send you guys. Make sure you remind me. But I have Jason and owner wanting the Fib video. So let me write down here so I don't forget. Jason and owner. There we go. Okay, all right. So maybe Dave also already has it because there we go. Yeah. So click on that and save it. I didn't meant to change to GJ. All right, so let's go back to the Tom's question. Great question. So Tom said, if I enter at 38.2, would I set my stop loss at 61? So no, I would not. And also, I would have not entered at 38.2. Why? Because it was not a rejection that I look for. This is what I look for here at 61.8, where only candle barely pierces through the level, right? Here you have a strong, and this is one thing I love the question, because this example right here, this candle on 1 hour is 35 pips bearish. So you definitely don't enter on that because there is a strong momentum and it's a bearish momentum. So you never want to buy against the momentum. Remember that. Never buy against momentum. Also here, when you see the rejection and it's turning bullish, never sell against bullish momentum. You want to ride the momentum. Why? Because that is where the hedge funds and the banks are pushing billions in this market. So all that is going to happen if you counter this, you're going to lose your money. So you do not want to do that. You always want to trade along the momentum, right? Remember not to do that. So the reason, like I said, I would not have entered because this was a very strong bearish candle. Yes, we had, break back above 38.2, here rejection, but see this candle. If I would have entered right at 38.2, that would have been maybe on this candle right there, right? But I would have waited for it to close and I would see this weak rejection and then I would probably get out my trade, or I would have it risk-free, meaning stop loss at the entry for break even, and obviously it would take me out, and then I would wait. See here, yeah, this you can make case. Well, honest, there's a strong wick indicating that it's rejecting 50, and yeah, but look at this. We have consolidation, and then it falls, breaks back below, and essentially respects 61.8. So here is your prime entry right there, right here. We wait for this because another strong bearish candle. It's probably 32 pips. So you don't enter on that. You wait. So even if you're more conservative, you don't enter on this candle. You can enter right there on the next one. And here, let's say you entered right there. You still get full potential of 108 pips with a drawdown of only 8 pips. Now, the question, where I would set my stop loss if I entered right there. Okay, I already know you are wondering. Let's say we entered right here. Stop loss would be right here, right below this 61.8 and those wicks, right? So stop loss would be at the most 30 pips, right? And we aiming for this top right here, which is 100 pips. So 1 to 3 risk reward, even a little bit higher, 1 to 3.5 ends up being. So that is the opportunities we look for. You know, decreased risk, but higher reward. So does that help a little bit, Tom? You're welcome, guys. Don't be shy. Don't feel bad. I can repeat it 10 times. Doesn't matter. It's also recorded. So no hesitation here. We are all here together, and there's nothing to be shy for. I wish I had asked a lot of questions when I first started, and I would have not lost a lot of money my first year. But hey, it's part of learning. The TP, well, essentially TP is this previous high, which ends up happening, but you see it going back to the resistance. So good question. Tom, yes, you can, but you can also go in a huge debt and lose a lot of money. So it's what they say, sword with the two edges, right? So this was example of this move, right? So let's say you TP'd over here, and now you see this reversing back again. Here we go, fibs. Look for another entry. Look at it, 61.8 again. And then TP here from this point would be this resistance, which ends up happening. So you could have been riding this if you like to hedge. Okay, Tom, pay attention here. This is how you also get really rich, right? So you entered right here, right? You wait for the pullback and you enter on 61.8 again, right? So you have two positions in now. Then another 61.8 pullback right here, and you enter again, right? And then you add fibs again here. Okay, right there. And then here we have a little bit stronger pullback, 78.6. No. That's already at TP. 1 second. Already TP'd. Let's delete it. So you have two entries off of 61.8, and you have entry from all the way from the bottom. So you're already floating in so much profit. And if you are wondering to add some more, it would be from right here. Okay, here 38.2 entry. So this would be your probably last entry because we are about to hit TP. And on the last one, you get another 60 pips. So essentially on this whole run, on this whole bullish structure, you would have had 4 or 5 entries, averaging 100 pips on all. So that is also goes back into the concept of compounding. So this is what you can do, Tom, rather than over leveraging, right? You can identify the structure and then keep adding on the pullbacks until essentially it reaches your full take profit. But I do not suggest you over leveraging, right? Another thing, let's look at it. This was probably a nice channel as well. Here we go. Okay, break above, started right here. Yeah, so on a 4 hour, started here, pull back. So let's say you missed it right there. Even though this was a weekly resistance, became support once it break through. But you see it respecting this channel, and then went back up, rejected, pullback. You can enter again here. If you are not comfortable using fibs, you enter after this candle, which meaning the one right there, after the 4 hour closes, and you still get 155 pips. So whichever way you prefer, I like combination of all. of channels and Fibonacci's. So that is what I use, but I know for some of you it will take time to get used to it. You have to practice it, pretty much train your eyes for it. And there's no reason to complicate it, just make it simple. Now let's see, we need to find intraday support here. Okay. That's gonna be the one. So 4 hour intraday support. What was the biggest change you made in your trading that pushed you from being unprofitable to consistently profitable? So it wasn't one single thing, it was few things, Tom. First, I stopped to overtrade, right? Second, I stopped looking at 500 different opinions, right? I used to be in so many Telegram channels, so many different people, and essentially at the end of the day you want to be independent trader and not rely on somebody's else opinion. You want to be able to trust your own analysis, and rather lose learning on your own, not learning on your own, meaning you don't get on the calls like this and you don't soak in from people who are doing already well, but not taking too many suggestions on what you should do or not do with your trade, because that brings down your confidence as a trader, and it just brings frustration, right? So reduce over trading. You don't need to be in a 10 trades at a time. I recommend 2 to 3 at a time. It's enough, trust me. Also, you should have a goal. So let's say your goal is 50 pips a day, 100 pips a day. Once you reach that, there's no reason for you to trade. You should close your phone, close your laptop, go hang out with your girlfriend, your friends, hit that happy hour, watch NFL game, basketball, whatever you like to do. Go work out, go for a walk, because if you think that just being in a forex 24 hours is what will make you successful, then you won't have a personal life ever, and you're gonna overtrade as well. There's no reason. You should pick the pairs that you're comfortable with, pick the session, meaning depending on your life activities, are you able to trade New York, are you able to trade London session, or that might be Asian. So that's something to consider, because you don't want to be trading all day, especially if you don't have time to fully be present on the charts, right? If you are just kind of opening chart and thinking that you see something, then that's not good thing either. You don't want to trade what you think, but what you see, right? What markets presents you when you see those pullbacks and stuff like that. If you are a full-time trader, that still doesn't mean that you need to be on charts 10 hours a day, right? Unless that is, something you choose to do. I'm not saying not. I love to be on the charts, but not the whole day, right? I like to do other things. I like to go out for a walk, go to gym, hang out with friends as well, stuff like that. So uh, I'm just trying to say that you being on a charts 10 hours doesn't necessarily mean you will be, successful. That's not it. It's reducing over leveraging, over trading, picking one strategy that works, not taking 5 different strategies and trying to master them. I'm not saying not at some point. The more you learn, the better it is. You get more confirmations for your entries, and gives you more confidence. But unless you master one, don't go with the 10, because then you will kind of know a little bit of each, but you will never be master of one, right? And one by itself is enough. Like me, my ultimate strategy and my approach is price action. And now that me and Sean have been working together, and utilizing K2 is just is just amazing. I mean, when my price action and Sean's K2 combined together, we have not lost the trade in last 2 months since we started. And you can ask him as well on his testimonial. So when we have outlook on the same pair, that is just straight profit. So if price action is complicated for you, you have K2 literally tells you when to buy and sell based on the education that Sean has put together. You just need to follow the checks right before you enter the trade. Okay, this is buy signal. Is the candle on 30 minutes that closed within this buy signal bullish, right? Okay, yes. So that is one check, right? Is this on a bullish trend? If answer is yes, then okay, good. So you enter, you set your stop loss on previous low, and you target previous high, and there you go. It cannot be simpler. I really don't. Like K2 was so good, just even without the trend mirror, but yet Sean has invested and paid the developers to make that for you guys, so you don't have to boggle your mind and banging your head trying to figure out what is the overall trend at the moment, right? Let's see. Yes, it can be headache. It can be headache. I'm just reading some questions, guys. From Gus, Sean has used. Nice. Personally, I use Ichimoku just combine just as a part of the whole K2 strategy, not with my price action. Essentially, yes, because I would, let's say, I would know that this is the pullback I'm looking for based on the Fibonacci and this retrace, and then I would go on a 30 minutes, and I would like, okay, let me see, is K2 verifying this buy? And it is right there, right? And you can literally have multiple entries within this whole structure. That's what is so amazing about K2, right? And look at the green lights with the trend right here. So you buy right there, we already mentioned. And there, look at this, there was no drawdown. Like drawdown was literally 9 pips, and you got 79 out of it. Like that is 1 to 10 risk reward. Like this is just it's amazing. I don't mean to do that. So yeah, Ichimoku as a K2, but I just as a price action just key zones with the Fibonacci and the levels, reversals and continuation. To answer your question, Gus. Tom, approximately what is your win rate? Approximately, I would say about 85%. I do sometimes I would have weeks where I would have, let's say, a lot of like small losses, meaning like 25, 30 pips, but my winners are usually like at least 60 to anywhere 100 pips. So I trade usually at least 1 to 2, but most of the time 1 to 3 risk reward. Tonight you just... Oh no, this we are going down the line, owner. Look at this. We are just on the second one. We have GJ, GA. We are going down the list, so no worries. No problem. You're very welcome. Question from Jason: how many pairs do you look for or analyze for your weekly or daily trades? That is a good question. So all the ones that you see here, gold, GU, GJ, GA, GN, all the ones that you can see as this list pops out, those are the pairs I mainly trade, right? And I don't need specifically gold, GBP, JPY, GA, GN, Euro AUD, Euro NZD, Euro CAD, and Euro JPY. Those are my top pairs. Number 2 is gold and GBP, JPY. So I don't need to trade all 30 pairs because I have had great success with the ones that I just listed. And there's always something to trade on them. And if there's nothing, then I don't trade. I don't have this urge to trade just for sake of trading. because then I might as well go to casino and just try my itchy palms, right? That's not what it is about. It's us obviously trying to compound and make profits. So yeah, those are the ones, Jason, right here. Huge, honest. Yes, exactly, Dave. Yeah, I will analyze any pair you guys ask, but I mainly trade gold, GBPs, few euros, and oil when it's a good setup. So yeah, and so let's conclude for GU. So GU, as we see, obviously rejected this resistance strongly. Now it's on its way back down to, I'm pretty sure it will reach this support without a doubt. So what I would do, that's only 20 pips away. Personally, I would not trade when the market opens. This I would wait to see if this support will hold. If it does, then we can buy it back up. And let's measure this retrace. Not like that. Okay, right there. So here we go, 38.2 example, right? So rejected 38.2 and definitely going back down. Now, if people who just trade Fibonacci, specifically Fibonacci tool, they will tell you if the 38.2 is rejected, first TP would be 27. I have it as a negative 27, right? So it will be this first extension, then TP2 is the 414, and then negative 618. So they will tell you that those will be the three take profits, right? Me, I'm not saying that I disagree with that, but I have this support right here, right? So I'm not just gonna sell through the support, because it can easily reject this. Yeah, you would have entered here, and that would be right thing to do on this candle, right? And you will be in profit now, 38 pips, right? If you still are in this trade, right? So, and I definitely foresee the structure reaching this support. So that will additionally add to your trade, and you will be at 58 pips, right? So 58 pips is a nice profit, nice trade. So now, if I was in this, I would pay attention to what it does when it reaches this support, right? If this support is holding, and I see a reversal in the candles, then I will close it, take my profits, and go back in a buy. So that is how you do. You don't just hold a trade without knowing what is going on, right? And that's what I was trying to tell you. You want to have the attention on the charts and trade what you see, not what you think will happen, right? Thanks. I will take. Yeah. I believe, Jason, you use K2, so you just switch to 30 minutes, and you look for the active signals, right? So here we have active sell, but the trend is not confirming it, right? Trend meter. So it is below cloud, so it means it's below resistance. And I definitely see it falling back down, but I don't know if it will fall below 1.24475. So for that reason, I will wait for it to reach that and see if it will be valid for a buy. All right, so that was GU. GJ, let's look at this baby. Oh, nice fall. Yeah, we were able to catch some of this. So yeah, breakout. All right, well, this definitely looks like it's going further down. Not 3-4 hour. Okay. All right, I like it. Look at that 4 hour. 63 pips. Beautiful. Okay, so right now, this is intraday resistance. right? Yes, Mohammed, I'll explain. So let's do that first. We have a question or one of our friends asking to explain fibs again, how I draw them and from where. So obviously you see here, this was a bullish push, right? Bullish push, and it ended with this candle, right? So you put your fib starting point right there, and then you bring it down where it was the last candle on that push, right? So you measure retrace when the impulse move is finished or concluded. Does that make sense? So this bearish impulse started here on the top and ended back here on the bottom, right? So now we look for this retrace because these wicks are indicating also this was intraday support at the time. So where we go to 38.2. And this is, if you miss this impulse down, this is where you enter after this candle. When you see it's rejecting, you enter on the next one. And from here, you would be in profit 89 pips. Does that help now, Mohammed? So you measure it from the start till the end of the impulse move right here. Not a problem. You're welcome. That is how you use fibs. Let's do another example. Let's see. Okay, from here. This was the last push. Came all the way here. And then we have 50 rejection. Yes, yes. For the buy, we're gonna go over the buy one just now. So there we go. Push back down up to 50 retrace, and you enter sell again here. If you miss that, you enter, see, perfect rejection. You enter, let's say, on the next candle, and there you go, 65 pips, just like that. So let's do a buy. We did 2 sells. Here we go for a buy. Up to here. And look at it. Not even full 38.2. Pretty much 23.6. When you get pullback to only 23.6 or 38.2, that really is setting up for the huge push again, because the sellers are not able to even push this further down for a bigger retrace. Does that make sense? Meaning there's so many buyers in this pair. And there you go. You see the rejection. And after this candle, you enter on a perfect one. Look at it. 66 pips again. It's really that simple. You just have to wait for the candle to show you. Why you don't enter here, right? Because it's a bearish and you are trying to buy it. Remember, you enter on a bullish move, not against it. Okay? So this would have been entry, and it's just for adding. You're welcome. You're definitely welcome. So current state of GJ, right? We had this reversal, obviously second entry right there. And what I would look for when the market opens for me to continue to sell this, I would look for the retest of this zone that it just broke into, right? Do not sell this. The reason you don't want to sell it is because you can get caught up in a drawdown. Yeah, and some people will say, well, it's looking really bearish. It might just continue to fall down. Okay, that's fine. Would you rather miss the trade or end up being in a bigger drawdown just because you guessed it? You know, you selling this and this just continuing to fall straight down, there's nothing technically that tells you that it will, because it already made 90 pip move, right? So at any point this can start retracing. So this is what I would look for. I would look for that retrace to validate this as a resistance now that it just broke to, and then continue selling it. And this is where the patient comes in. And from there to here, 90 pips again, right? Or you can do this. Once you see one bullish candle, you add from here. Let's say this would be the, let's say it starts retracing back up as soon as the market opens, right? You already have your fib set and you wait. All right, so will it respect 23.6, right? Will it respect 38.2? And then you look where you can enter for this sell. Or it might just break back up. Doesn't matter. See where the 61.8 is at the next resistance. That would be perfect entry. So you don't want to just guess the trades. You want to wait for them. So once again, I would expect this retrace to happen, possibly to here, and then enter the sell one of those two levels, right? And ride it back down, not even to this intraday support, but to weekly support, right? Where we have this traffic. Okay, so I am, as of right now, bearish on GJ. So let's look at the GA. GA, nice. Look at that. We do have a breakout above this resistance. I'm pretty sure this is weekly. Don't know why I have a daily. Doesn't matter right now. So we have breakout, right? But we also have double top. So, and the current or the last candle is pushing back below this zone. So for me to enter this, I would like to see further push down, retest to validate it once again as a resistance, and then you buy it, and then you sell it from that level to here. Your first take profit. This is support. If this breaks, the second one would be right here, this zone. So if this confirms that the price is reversing back down, first take profit is 70 pips, second one is 178 with a small risk. Your stop loss, once you see the rejection off of here, would be above this candle right there, which is, to round it up, would be 30 pips. 30 pips for the potential of 178. I take that anytime. So I am biased towards this bearish move as well on GBP AUD. GN, I'm assuming, is the same, a little bit different, because they really move pretty much the same. As you see, again, double top, same as you just were able to see on GBP AUD. But let's look at this once again. Oh, look at that pullback, shot like rocket. Line. Okay, we'll hold that. This is the next resistance. Yep, and rejected it. There we go. You see how important it is to have your zones right. Like, look at it, perfect rejection. You could have set sell limit right there, and you would be already 73 pips in profit. It's very important to look at it on a higher time frame. This is weekly resistance. This is weekly support. .1 hour. Yeah, I see this falling down as well. I would like to see some pullback, but again, you see right there, and we had almost 78.6, which is the last level of the retrace before turnaround. Pretty much just wicked it. So after this candle, I would have probably sold right there. I'm just trying to show you guys how I think before I enter the trade. I would have sold on this candle opening after this one closed because we have two strong wick rejections, and that would have been a nice trade. 59 pips already. So I do see this falling back down, but once again, I would like to see small pullback for me to enter. I don't want to enter already once this has made 60 pips move. If anything, after it breaks this level right here completely, okay, because then those wicks will definitely be covered. Wicks get covered with momentum as well, so we will see if when market opens this gaps back down, and then we get a retest, and that would be my sell entry. I personally trade in the zone to zone. So, for example, from here, I would have traded to this support that we just drawed. So this would be my first take profit, and so from right there to here, that's 70 pips. Entry is after the rejection off of the weekly resistance. That is the entry. That's why I have the zones drawn, JSON, so that I know when I see the rejection, okay, I can buy off of this support or I can sell off of this resistance. And then usually with GBPs, I try to have a little bit higher stop loss. So it would be definitely above this wick. So to round it up, it would be 25 pips. And I was able to catch 70. So pretty much 1 to 3 risk reward just for the TP1. But this has potential to fall much, much higher. It can end up being 167 pips, 165 to just round it up. So risk 25 for 165. We have a question from Gus Schmidt. Which session do you find most opportunities, New York, London, or Asia, Japan session? Great question. I mainly trade Asian, pre-London, or opening of London session, right? Because usually during the Asian session, you will see retrace or pullback or push, and then in the London, it will reverse. So that was a great question. So I mainly trade Asian session, and which is right before London, pre-London, and opening of London. Sometimes right before New York, but that's only like 5 to 10% of the times. Mainly Asian pre-London, and like I said, London opening. Those are the ones. This is the time frame I look for the entries, because the pairs I trade, they set up around that time, and that's when I do not trade New York session. I can probably list 10 trades that I have traded during New York for last 2 years on my own. Okay, so I don't do New York. It's just it doesn't go with my lifestyle, with my personal obligations. So it doesn't work for me right now. Not saying that at some point I'm not going to, but right now that is time I trade. Okay, well, looks like all GBPs have similar structure. Again, I would wait for this to reach this support. and see what it does right here. Pretty much same thing, reversal from the weekly resistance. It looks like a nice channel though. Let's check this on a 4-hour. Yep, nice channel right there. Yeah, we had a break. It was a breakout, but again, look at this. Remember, guys, in the beginning, I had example of the evening star. This right here is the morning star. You have a bearish candle push down, followed with another bearish candle, and then big bullish candle engulfs both of them. So this is known as a morning star, meaning the bullish reversal, and that end up happening. So you would have entered on this candle and essentially 90 pip move. Very, very powerful candlestick pattern. Morning and evening star. Definitely write it down. Try to spot it. It's very, very powerful, as well as the just engulfing on its own. Let's see if you can just see another morning star right there. Beautiful. Okay, so there we go. This is known as an engulfing candle. This one right here, right there, completely covers the previous candle. Again, another, this is bullish engulfing. It can be bearish, like the one right here. Can be bearish, which, essentially price pulled back, but it fell back down. Same right here. Example of bearish engulfing candle, completely covers the previous candle and the price continues to fall down. So some people just trade candlestick patterns. They are really powerful. There you go. Bullish engulfing, pullback, and the price went to the moon. If you entered on this one, let's say right here, even here, 310 pips. Going back to the current state on GCAD, breakout of the channel. I would wait to see once it reaches this support, what it does. I'm not entering this. There's no good entry point. I do not want to enter in the middle. Yeah, it does look like it broke out this consolidation, but I don't want following to happen, and that is that this starts reversing to retest this, because we after this breakout we didn't really had the retest of the channel, nor this resistance right here, which is really strong resistance. We just broke into it through, came back down, but no retrace. So I don't want to risk entering this sell for just 42 pips, where I can end up being in a 108 pips drawdown. Doesn't make sense, right? The risk is 3 times as much as reward. So I would no, not that. I would wait for it to see if it comes back down, and if it respects this, then we can buy from this support, or if we get the retrace back up to retest the resistance, then we can sell from there, which would be a pretty massive drop. That was GBP CAD, GBP CHF. Nothing in the middle. Support. Haven't traded this pair in a while. Let's see here. Okay, yeah. So this could be something to enter if we get this retest and then continue selling it back down. So I like this, but not ready to enter, right? Because already making a move and it's bearish momentum. So I don't want to get stuck in a drawdown, because at any point this can show some pullback, and we can use again fibs to measure that. Wherever this stops, let's say it pulls back to this previous low, which is the one right here, and rejects that, then we can look for either 38.2, which would be perfect. You see how this makes confluence, 38.2 pullback into the current resistance, and then sell from there. That would be beautiful. Easy setup and potential of 113 pips. So for right now, nothing, but I am bearish on pretty much all GBPs as of right now. So let's take a look at Euro AUD. Oh, I like this. So mark the zone. It's a liquidity zone. You see, tested it 3 times. This can actually fall, and it really makes sense to fall. Right now, it's in the middle of the zone between weekly support and resistance, but it never really gave the retest ever since this previous weekly resistance was broken, which now serves as a weekly support. So triple top could be a nice fall here to the weekly support. Also gives us that retest that we want to see. 110 pips. I like this. I will definitely watch this. So need to mark with the green. So I will be watching that, probably call that tonight. I just need to see how what candlestick formation would happen first 2 hours of the market opening for me to determine if I'm selling this or if we're gonna wait for it to reach this resistance and then sell it from there. But it does look like it will come back down to gives us this retest of a weekly support, because it's trapped in this zone, three touches on it. So yeah, Euro GBP. All right, that's weekly resistance. Haven't traded this one in a while too. There we go. This is weekly support. Perfect. All right, and this is looking nice. See, came back down, made a lower double bottom, and shut up. And this is something we can now wait for, because we have this. So this is where fibs are valid at the moment. After the bullish move, we have retrace happening, right? So we just have to wait, see which level this will reject. I would love to see rejection right here. It's a 50% retrace of Fibonacci and a weekly support. And this would be amazing buy from here, right? Is that if you target the next weekly resistance, that's 70 pips. So this is the one I'm going to send you a screenshot, because this is looking really nice right now. So I put it in a chat. So save that and watch what it does. You can copy the levels into your own trading platform. I don't know if you use MT4 or TradingView. I would definitely recommend becoming familiar with TradingView, because there's no slippage, and it's just this easiest tool for analysis. So EG is looking nice. we're having a pullback right now. We just have to see if it's going to reject 38.2 or 50. Euro NZD. Okay, well, this is looking exactly the same like Euro AUD. Okay, so I'm gonna mark that one green too. From here to there. Okay. The only thing is the structure is a little bit different. Support. So we do have this zone hold. There's a strong wick rejection there. We do have a double top as well to make a case, but it's not looking as pretty as Euro AUD. And usually GA and GN and EA and EN move alike. There is a slight difference, so that's another thing I use as a let's say confluence and correlation. If I look at Euro AUD and the structure is looking like clearer or looks a little bit better, and I can determine the move on this one, I know Euro NZD will follow. I know 95% of the time same. Exactly applies at the GBP AUD and GBP NZD. And as you trade as you become more familiar with those pairs, you will be able to see that for yourself. Let's just see here. Okay, so this is something we can wait for me to sell it. I would like to see break of this trend line that it's been riding now for a while. Yeah, it's on 1 hour, and yeah, even if you go on a higher time frame on a daily, clearly is bullish. So in this instance, I know I can use 1 hour just to look for that breakout, because I'm looking to sell this, counter trend it, as I would like to see same thing on Euro AUD, as well as here. I would like to see come back down and retest. Yeah, this was the weak rejection, but I would like to see full candlestick body reject this support. We have question. How exactly do you know where to place the Fibonacci retracement? Good question. So you place it on the beginning of the impulse move till the end of it, right? Here, let's do one example. I'm assuming you joined us a little bit late. Here it is. So this is where the impulse starts, right? And this is where it ends. So right here, you look for it and you get 61.8 rejection. So after that, let's say you didn't had a buy limit at 61.8. Let's just you were waiting to see where actually it will reject and where this retrace is going to stop. You would enter on this candle right here, and that's 40 pips right there. K2, right here. That's we have question from Kathleen. So here it is, K2. I was just showing them how I use my price action in combination with K2. No. Consolidation is when the market is going sideways, Jason. Consolidation is this right here. This right here is consolidation, where you have up and down 10, 15 pips. Impulse is when you see this move. Let's just switch back right second. Impulse move is this. This is the impulse move. So you don't want to trade consolidation, which is this right there. So going back to the Kathleen asked for K2. So this is the K2, to answer your question. I was showing them how I use price action with combination of K2 to pretty much like make it so easy to trade. Yes, I do. I only have Instagram, and this is my Instagram right there. So there you go. This is just additional that I teach, Kathleen. So you don't really need to follow if you don't want to. I just, you know, it's my first approach to trading. I've been very successful with it. So in combination with K2, I pretty much don't lose when I'm able to match K2 with the strategy that I've been using and has been working for me. So you just keep following. If you only trade K2, you wait for the buy signals right here, verified with the trend, bullish candle inside, and you catch 20 pips right there. If you are confused or you need more explanation about K2, let me know. We can set up a session for that, but all the videos and explanations are already in a K2 YouTube channel, and Sean explains it even better than me. Going back to Euro NZD, for me, I would wait for the break of this trend, and then I would sell it. Again, if you're a premium subscriber to K2, you should wait for the sell signal and for the trend mirror to verify that sell. But based on the price action, I would sell on a breakout and possible retest of it. We have another question. You may want to mark the bottom level. You mean this right here? That's right there? You could, but I know once this breaks, it will fall back down. So yeah, you can use that. I personally use the intraday on a 4-hour and a daily. It's just how I trade and how it's been successful to me. So, but that one will be much lower here. So I look to get into it sooner and catch more pips. That's just me personally. So Euro NZD, I am favoring this bearish move. However, it can reject this trend line and continue back to the resistance, and then we can look for potential sell from there. Also, you could buy it on a break of this. Let's see if I can. Yeah. You can buy it once, and if it breaks this previous high right there. Right now, I wouldn't buy it unless this retrace stops, which you can use fibs to verify. Right there. It's almost at 38.2. So right now, there's really nothing to enter on it. Either break of this trend to go back down, retest the support, or rejection off of the fib level and continuation to the upside to reach this weekly resistance. So that is what I see on EN. EuroCAD. Oh, EuroCAD is looking nice. I like what I see. So this, we obviously had a break below previous support. Now it's resistance. And let's look at it on 1 hour. Ah, man. So here, a little bit late to this trade. I won't chase it unless it breaks this low right here. But it was a beautiful setup, rejecting the resistance and confirming that, you know, this market structure is currently in this zone. But essentially this week, I would look for it to reach this support right there. So from the current level, that would be about 109 pips. So that is what I see on EuroCAD. Pretty simple. Also looks like a channel formation here. Right there. So yeah, rejected here, there again. So it can keep riding this up and down, essentially until this support reaches. If you have a K2 subscription, there you go. This actually, the last 30-minute candle on Friday is indicating sell. The trend meter has not yet verified, but we will see how market opens. This, confirms what I see, that this should be coming back down. So once you have both as a correlation, it really should be easy trade and a possibility to make some money. And here we go, Euro JPY. Let's go on a higher time frame. Okay. Almost at the support. Yep. Let's see if we have a trend here. No, actually broke the trend. Let's see, on a weekly. On a weekly, we don't have a breakout yet of the trend. Let's see from the top here, because it was in a downtrend. Well, soon we will know the big move on Euro JPY, because this is the still overall downtrend on the weekly. So we're gonna look for the sell opportunity usually, because we don't want a counter trend, and we missed this move. But once market opens, put it on 1 hour, I would look for at least pullback from here, because we do see the slowdown. I'm pretty sure it will reach this support, and then if you wanna follow it, look for the reversal for the first bullish candle, then place the end of the fib on it and see where it pulls back to continue this sell, because this is a big bearish pressure, and overall weekly trend is still bearish, so I'm pretty sure this will continue to fall. We just have to wait for the entry. I wouldn't enter now, because this has already made 86 pip move, and it can start retracing at any point. as well as approaching this support. So pay attention to that. This can look like a nice sell. We just have to see where the retrace will stop. And I'm gonna mark this one as well. So we have three pairs to follow up on tonight for possible setups. And if I decide to enter and I see what I like, I will definitely call in the K2 trades alert. So make sure you guys are in there. Yep. And there was a, me personally, if I see the bearish impulse and confirms with the K2 signal, I take it, but that's just me. Usually you want to wait for the trend meter to confirm sell as well. But even here, you would had 58 pips trade off of the sell signal. So this is definitely on the watch list for tonight. Okay, so those are the pairs that I wanted to cover and also show you guys how I identify my support and resistance, what candlestick patterns I look for, how I use and look for the channels, breakouts and retests, validation of the zones, how I trade zone to zone, how I combined it with the K2, and it's really working well. It's really simple. Just K2 alone, you should be able to be so much profitable. If you want to add this as well, the price action, go ahead. I try to share with you whenever I can, do refresher training, but also we go over the pairs, so you can kind of have idea what I'm looking for the upcoming week, and that's pretty much it. So we are almost 2 hours on the call, so I just want to know if you guys have any questions. If something was not clear, the call is recorded. It will be uploaded to the YouTube channel so you can watch it again. So if someone missed it, no worries. I will have a chance to watch it all over again. So do we have any questions? You are welcome, Mohammed. You're welcome. Question from Mike. Yes, I do. I mainly trade crypto. Bitcoin, so, from time to time, yes, XRP. Where is it? XRP. So here's Bitcoin. Okay, here we go, XRP. Definitely trade it. This is let's actually look at it. Let's look at it together. Looking for a big, yep, it's setting up. Look at this consolidation on a weekly. It's just gonna shoot up. All right, let's clear everything up. Start fresh. And this was another example of the side channel consolidation and breakout. Easy setup. All right, so we are on the weekly. Let's take a look. Right there. Let's see, daily. Okay. Okay. All right, so that is looking nice. And let's go on a 4-hour. All right, so this is the current zone we are in. And let's find the intraday support. Okay, like that. Like that. And beautiful. And there we go. And we are ready to look for the possibility. So here we go, Ripple. Rejected this intraday support right here. Intraday resistance. And this is also next intraday support. Right. Okay, so Mike, personally, I do see this going back up. Obviously, let's see. It could pull further down, but this current 4-hour wick is rejecting pretty much the support. You know, it's you know, obviously for those who don't trade cryptos, they have a big spread. So for right now, on a smaller time frame, it's consolidating. So I wouldn't enter it just now because it's in the middle of the zone. But if you get the pullback here and then you see it respect, then you can buy from that level, which is 26,795. But for me, stronger buy area would be right here, where you have another intraday support as well as the current trend line on a smaller time frame, and it's a better confluence for a buy from here, which would be at 26 cents. However, it doesn't mean that it will show us that pullback. So you can buy once you see the breakout and you see it hold above this level, right? And when this resistance becomes support, then you can buy it to 28,860. If you are a subscriber to K2, K2 is really good for crypto as well. As you see here, last sell signal currently, well, it went all the way up to 100 pips, but currently 56 pips running. So you can also wait for the buy signal if you are a member and you do have access to K2 strategy. Also, all those who do not have, we do give it out. Sean does approve you for a 7-day free trial, so you can test it yourself before you decide to purchase it, and it's completely up to you guys. But I would wait for a little bit more of a pullback and buy off of one of those two zones, or I would wait for the breakout and then buy it if you are looking to trade it. So that's what I see on Ripple. But yeah, I do trade it, not a lot, but I do trade it pretty much only on the weekends. Like Saturday, I believe, is the best day because, you know, everybody who are still eager to trade, since the forex market is closed, they turn to crypto, and Saturday is when you really see some movement on those cryptocurrencies, because a lot of people are trading it. But yeah, only Ripple and Bitcoin. You're very welcome. Yeah, you really don't want to trade crypto during the week, to be honest with you, unless there is some, let's say, major announcements related to them that will bring liquidity, that will, force some people to either buy or sell based off what the news related to cryptocurrencies are. Obviously positive news will lead a lot of people, probably institutions, to decide to buy it, negative to short it. But essentially in the long run, I do expect cryptocurrency to recover, because it is slowly and slowly becoming more accepted. So I mean, Ripple was at one point, let's look at the weekly. Yeah, at one point had such a high value right there, $3.30. So, and you can most likely see this happening once again, right? Once if officially becomes accepted as a currency, I mean, more like a worldwide, and gets accepted for more purchase options and stuff like that. So it definitely expected to gain value. So yeah. You're welcome. You're welcome. Do we have any other questions, guys? Feel free. If not, we can conclude this, and then I can have it converted, and we can upload on YouTube channel, so you can watch it again if you miss something, or you want to go over it again. Hey, Dion, are you still there? I'm trying to scroll back through the chat. I'm not sure if I answered your question, because I did say I'm gonna get back to it. Let me see. Okay, yeah, we did few fibs example. Thanks much. You're welcome, Gus. Mike, USD try, so USD Turkish lira. I used to trade it, but honestly, don't trade it much. The what is it called? The exotics. I really don't, because all those pairs that you are able to see here, the list, gold, GBPs, and euros, I'm able to get enough off of them. So, and I'm not a fan of the big spreads. So for that reason, I don't really trade exotics. It's really rare, but when I do, yes, that is USD MXN, Mexican peso, USD Turkish lira, and USD ZAR, which is a South African national currency. Thank you for everything. This is my first time. You're welcome, Tommy. You're welcome. We'll do this every week. Also, make sure you check out the K2 YouTube channel, because there is a bunch of recordings of this weekly meetups and stuff. Nice, Dion. Very happy to hear that. Very versatile. Yeah, I mean, you do want to slowly expand, try different things, Mike. There's nothing wrong with that. But this is the basic point. If you are already, let's say, doing well, there is no need for you to really just be all over and chase every market and category. It's just you have to see for yourself what you prefer. Some people just do indices, like Nasdaq, like US 30. They are great. Like, they make amazing moves. They can move up to 800-900 pips a day, but also the spread and drawdown is the high. So it really falls back onto how big your account is. You shouldn't really be trading crypto or indices unless you have like $1,500 at least in your account, because you want to be able to handle the drawdown and stick out with that trade, because the drawdown can be sometimes 300-400 pips in them before it actually goes your way, right? So you don't want to be taken out of the trade that essentially will end up going the way you foresee it. It's the worst feeling ever, trust me. There's nothing worse to me when I have a little too tight stop loss and just kisses it, and then it goes straight to all my TPs, reverses, So that's my opinion on crypto and indices. But yeah, I mainly 98% of the time I just do currencies. Commodity, obviously gold. Just it's very, very great technical pair, so I love it. But yeah, so let me know if you guys have any more questions. If not, we'll conclude, and will be uploaded on our YouTube channel. Okay, looks like we don't have any more questions. So thank you guys once again for joining. We will do this. I'll try to do one in the midweek, like Wednesday, so we can, see where the market is moving and what can we take advantage of. But obviously, all the trades I decide to enter, I will share in K2 Trades alerts. So you can follow if you like. And Sean obviously shares a lot of his trades and good setups. So hopefully we all have a really good and profitable week. And I'll catch you guys in a chat.